Take the 60/40 portfolio, you take out some of the bonds and put something like gold in the place, maybe not for all of it, but some of it. And you take the equity side and you take a little bit of the equities out and put in some Bitcoin. I think more fundamentally what it does is it solves the problem of fast settlements. Kind of solves a century and a half problem that humanity's had. Right now, even at a $2+ trillion market cap, it seems big, but it's something like 0.2% of global assets. Gold at something like a 20 trillion network size estimated is around 2% of global assets. So I think Bitcoin is going to grow into kind of the role that gold fills to some extent.
In today's video, Lyn Alden reveals her 3-pillar portfolio strategy, why the old 60/40 model is broken, and how equities, hard assets, and Bitcoin create a stronger foundation. She explains why Bitcoin isn't just digital gold, but a breakthrough in fast settlement and portable capital solving problems gold and fiat never could. And don't forget to join our Telegram group for exclusive Bitcoin insights and daily updates. The link's right below.
The way that I've approached investing for myself and my clients is I generally say a 3-pillar portfolio. So most people are they think of the 60/40 portfolio, so 60% stocks, 40% bonds. The problem is that in fiscal dominance, bonds don't do very well. They generally lose a lot of purchasing power. And so my approach is instead of 3-pillar portfolios, so one pillar is high quality equities. So that part's still the same. One part is hard monies, commodity producers, kind of the more hard asset type of approach. And then the final pillar is cash equivalents. So that is a section that does get debased, but it can be used to kind of protect against volatility and rebalance into the other portions. And that, of course, will depend on how old the investor is. Another way of kind of thinking about it is you take the 60/40 portfolio, you take out some of the bonds and put something like gold in the place, maybe not for all of it, but some of it. And you take the equity side and you take a little bit of the equities out and put in some Bitcoin. That's kind of how I've tailored a portfolio because in that fiscally dominant environment, those types of monies, those types of more hard assets tend to be winners.
Okay, and how do you conceptualize Bitcoin? Do you think of it as gold? Do you think of it as money? How do you categorize it in your mind?
In some ways bigger than that. I view it as money. It's also portable capital. I think more fundamentally what it does is it solves the problem of fast settlements. And so it kind of solves a century and a half problem that humanity's had. So for all of human history, transactions and settlements were roughly at the same speed. You couldn't really transact any faster than you could move around the world. So transactions happened at the speed of foot and horses and ships. But ever since we invented the telegraph, and specifically when we deployed the telegraph over long distances by the 1860s, we reached kind of this new era where people could communicate around the world at roughly the speed of light and therefore could transact roughly at the speed of light, but we had no fast settlement. So settlement still took the form of literally sending and auditing gold, for example. And so we became reliant for about a century and a half on very centralized ledgers to try to bridge that whole gap between fast transaction speeds and yet still very slow material settlement speeds, any sort of like final delivery. And what is interesting about Bitcoin is that it's basically the invention of fast settlements. It finally allows a value to be sent long distances in a way that's practically irreversible, in a similar way that you'd ship gold and it gets audited and therefore that transaction's done. It's not resting on a centralized ledger's ongoing maintenance. And so that's basically what that problem solves. But then it's up against very large network effects. So it starts in 2009. It's tiny. It's up against the $100 trillion fiat currency system, and so it's slowly growing into that. Right now, even at a $2+ trillion market cap, it seems big, but it's something like 0.2% of global assets. Gold at something like a 20 trillion network size estimated is around 2% of global assets. So I think Bitcoin is going to grow into kind of the role that gold fills to some extent, but then potentially has a avenue to grow further still because it's able to solve things that even gold itself as a money can't solve. So there's certain things obviously gold can do that Bitcoin can't do. You can use it in industry. It has all these kind of practical purposes. But as a money, Bitcoin is in many ways more powerful. It's able to beam around the world in 10 minutes, even faster by using some higher layers. And I think another way of kind of thinking about it is because especially with your audience and in general, anyone who's technologically minded, our first thought is, well, the first technology is going to be the one that gets displaced. It's going to be some later thing that comes and displaces it. And the way that I've kind of conceptualized this is that the really big exception for that is communication protocols. Those so far tend to have a very long life cycle of lasting. So whether it's Ethernet, whether it's simple mail transfer protocol, whether it's TCP/IP, whether it's USB, once these things kind of become dominant in their fields, they tend to one, they update over time. So what displaces USB is the next USB rather than literally a competitor. And two, the complexity and the fast moving parts, that tends to happen at the periphery or on higher layers, whereas the core of the system itself is kind of very simple. And I think that Bitcoin is kind of following a similar approach, which is this new communication protocol that exists. And in this case, it's a communication of value. And it's achieved basically network effect dominance. So it becomes increasingly less likely that something within its own field will displace it in a similar way that Ethernet and USB and others have kind of achieved dominance. And therefore, it's going to grow into whatever total addressable market it has, which I think is north of gold's current 2% of global assets.
What do you think about people that aren't they either aren't sold or don't care about it as a transactable thing, but they think instead of it as a store of wealth? Does that seem silly, or because Bitcoin is not transacted like money is right now?
Yeah, I don't think it's silly. I think that basically people solve the problem they have. And for most parts of the world, people, when they wake up, they don't have a payments problem. They have a store of value problem. That's something that people in developing countries have. And then even in developed countries, we just have a slower version of it, is where are we going to store our value? So that's something that basically 8 billion people in the world have as a problem. Payment problems, while some people have them, they're way less universal. Most people in developed countries don't think I have all these payment frictions all the time. Now, certain areas do. There has been, for example, debanking. In certain countries, people have the issue. Like I point out that there's over 40 currencies in Africa. There's over 30 currencies in Latin America. So we can imagine in the United States, if every state had a currency,
Oof.
and imagine all the cross-border frictions, not just in terms of payments, but in terms of cross-state lending and things like that. So if an entity in New York wants to lend to an entity in Michigan, and you're balancing 50 different currencies, and so a lot of the world actually kind of lives under that type of friction-filled system. So they, especially in a cross-border sense, you're more likely to have payment frictions. So I think that the problem that Bitcoin is kind of filling into, the thing that it's solving, is more that portable store value problem. So it's portable capital. But then around the margins, it can also solve payment problems for those that have it. But then in addition, that's a crowded field. So for example, stablecoins, not for every person, but for a lot of people, stablecoins solve a lot of their frictions as well. So going back to that example about Africa, like you'll see a lot of stablecoin volumes happening in several countries there, like Nigeria, because especially for shorter term holding and paying, stablecoins are equal or in some cases better than Bitcoin at that specific task. And where Bitcoin really shines is that over that long arc of time, it can't really be sanctioned. It's not centralized. It doesn't debase. It's truly permissionless rather than this kind of centralized node on top of a blockchain. And so I think over time it grows into more of that payments aspect. But I think in the current time where it's high volatility and it's growing into its total addressable market, it more serves as that kind of portable capital aspect.
Okay. Whenever I think about Bitcoin, and my audience will know, but for anybody that's encountering me for the first time, I'm heavily invested in Bitcoin, big believer, but I definitely don't trust myself to be right about Bitcoin in the way that, say, Michael Saylor does. What do you think about the Bitcoin treasury companies, Master, in terms of that just massive concentrated bet?
So I think it makes sense for someone to do it. I mentioned before that basically in this current system where you have debasing currency, anytime someone can borrow or short fiat currency and go long another asset, as long as they manage risk and volatility well, they get rewarded for it. So I think it makes sense that someone figured that out. You can do it with Bitcoin. It was actually written about by Pierre Richard back in 2014. He wrote an article called Speculative Attack, and he's like, someone's going to figure out that if you can borrow fiat currency and buy Bitcoin, you're just going to keep doing it over and over and over again. That started happening 6 years later in 2020, and it's been happening ever since. And we're starting to see it in other companies as well. So Metaplanet of Japan, a bunch of others. I think that makes sense. I do think that, this cycle will hit a degree of froth in it. And so some of these levered entities will get shaken out. We've also seen, altcoin treasury companies spinning up, which I think, looking back years from now, will probably not be seen as very positive things to have done to, use leverage to kind of stick altcoins in a publicly traded vehicle.
Just because they're going to wipe out value? Why would we look back and say bad idea?
Because it wipes out value. Yeah. I think basically there's been a long history of, altcoins have one or two good cycles under their belt. When they come out, they get launched, they get hype, but then they kind of roll over relative to Bitcoin and then never really recover. So that's been kind of the case over and over and over again. And I kind of expect that to keep happening just because of that communication network effect aspect that I talked about before. So
do you think though that with the altcoins that people are really fooling themselves into thinking this one's going to be bigger than Bitcoin? Is that the phenomenon, or is the phenomenon I'm going to bet against or bet on culture? I'm going to be smarter than the next guy. This is PvP servers all day, and I'll just know when to get out.
Yeah, I think that makes sense. I think that a lot of that is PvP. I think when you put it in a publicly traded vehicle, it gets a little bit more potentially serious, or the scale's bigger. But yeah,
so
I think
those guys, you really think like that's wild to me. First of all, I didn't know that there were companies using an altcoin treasury like approach. Obviously, if they created their own coin, sure, but that seems insane. Is this a thing that's happening a lot? Like, are there any altcoins that you could point to and be like, well, that was smart? I mean, maybe Solana, but like, woof. Other than that,
yeah, I think a lot of them can make good trades, but I think that none of them really have the quality of a treasury asset, which is different. Basically, it's something that I think there's a difference between like a hedge fund holding a trade versus a publicly traded company using it as a long-term treasury asset. I think Bitcoin has met that standard. I don't really view others as having met that standard. I think they're more like penny stock tech plays, basically, where, for example, I'm on the record of being bullish on stablecoins. So obviously, any sort of rails that enable stablecoins to function have some degree of value. So I think it's not to say that there's no value in the space, but generally speaking, it's inflated because there is this really big speculation element and this PvP element kind of built on top of it. And so I think over time, you've kind of seen the narratives play out. And now the narratives in that whole space are pretty weak outside of stablecoins and certain other forms of tokenization.
Do you use debt to buy Bitcoin?
I do not, but I've been long MicroStrategy since 2020. I treat it as a much smaller position than core Bitcoin. And then anyone who has optional leverage that doesn't get rid of it is in some ways using leverage to buy assets. So, for example, I have purposefully I have mortgages attached to properties because if I can short fiat currency at 3% for the long term, I figured instead of selling stocks or selling Bitcoin to pay that off, I'm kind of indirectly slightly levered on assets. But for the most part, I let other proxies do it for me. I let MicroStrategy do that for me rather than myself hold Bitcoin in debt.
That's Lyn Alden's blueprint for building resilience in today's markets, and why Bitcoin could be the cornerstone of a new financial era. If you found this breakdown helpful, make sure to hit that like button, subscribe for more macro and crypto insights, and join our Telegram group for exclusive daily updates. Links in the description. See you in the next one.